Liar loans, built on false information, kick-started the global financial crisis 10 years ago. Now, they're on the rise in Australia.
It's not an honest mistake. You want to buy as good a house as you possibly can and therefore get as big a loan as you could possibly afford.
Until recently, it seemed all you needed to get a home loan was a heartbeat. With house prices soaring, the Royal Commission exposed how banks ignored responsible lending laws and handed out loans without proper checks. Banks promised to ask customers tougher questions, but with stagnant wage rises, customers are fudging to get their loans over the line.
I think it's a really unpleasant term, liar loans. People find it really hard to estimate how much they're spending and where they're spending it. We are not good historians about our past expenditure.
According to a new survey, more than a third of people who've taken out a mortgage in the past year didn't tell their institution the truth. That's a record level. They've understated their living costs, understated credit card and car loan debts, and overstated how much they earned. The survey comes as the Treasurer pushes banks to loosen lending.
A sensible balance needs to be struck between an unduly restrictive application of these obligations, knowing that they can do as much harm as an overly lax one.
There's more fuel for the fire, with the Reserve Bank set to deliver an imminent rate cut, expanding how much people can borrow if banks pass it on. I've asked the CEOs of some of Australia's big four banks what they first looked for when they cracked open Kenneth Haynes' final report. And it's always the same thing: responsible lending. That's because any changes would hit the massive mortgage books that generate their huge profits. Daniel Ziffer, ABC News, Melbourne.